and welcome to Interactive Investors Q&A series, where we answer your investing questions. No question is a stupid one, so whether you want to find out what you need to do to start investing or how the stock market works, don't be shy, ask II. Email your questions to ask@ii.co.uk.
Hi, I'm Kate from Chester. I recently heard about ESG investing, but I don't know what it means. Is this something that I need to know about?
First of all, it's great that you've even heard of ESG. It stands for Environmental, Social and Governance and is becoming increasingly important for all investors. Why? Well, from a purely financial point of view, there's evidence that companies that take these issues seriously tend to perform better over the long term. Companies with poor ESG records might also end up suffering financially, and there have been plenty of examples of poor practices leading to share price declines and losses for investors. But also companies that are actively trying to improve the environmental society or the way business functions are raising standards for the whole global economy, so you might want to back them for that reason too. Some things to bear in mind. ESG is a very broad church, with varying standards even among funds that have a label of ESG. It's always worth investigating the top holdings and not taking labels at face value. And there are so many labels to confuse the issue now. There's sustainable, responsible, green, ethical, stewardship, positive impact, ESG, all with different approaches to the same issues. Often they all come under the umbrella of ethical, but then this more traditional label doesn't always do justice to all the newer approaches. For instance, positive impact, which involves only investing in companies that are in the business of finding solutions to the world's ESG issues, often based on the framework of the UN Sustainable Development Goals. With this new language around ESG investing, it's no surprise that greenwash has become an issue. This refers to the problem of overstating green claims to win business, and it's rife, particularly with the labels sustainable and responsible, which often mean having a long-term or prudent approach rather than living up to their greener connotations. Some funds invest in companies that are spuriously sustainable at best, such as oil companies, but they do so because the companies are best in class fossil fuels or are committed to strategic shifts towards cleaner practices. Some fund managers invest in these companies on the basis of an engagement strategy, which means they actively try to get these companies to change their business models, an insider activist approach, if you like. So you can see how taking these labels for what you think they mean rather than what they actually mean, according to the fund managers, can lead to disappointment. If you're interested in this area generally, it pays to do your research. There are more choices than ever out there now for those who want to invest with a conscience, whether that's with an environmental, social or governance viewpoint, or all three.